All right, boom. Maven Trading, get yourself funded. MavenTrading.co. Guys, I think there was a little bit of confusion in a previous video I made. SMC, big ol' X in there, saying that don't do SMC. I explained one example of a problem with SMC and the ICT style trading. There was some confusion in that people thought I was explaining the same thing as what SMC is. So we're going to dive deeper into a couple of the problems with SMC here. Let's jump into that. Supply and demand type traders, SMC, ICT traders, they would then look at this impulse move and they'd say, hey, I want to buy in here. But they're just coincidentally being right. They're not actually understanding what's going on. So quick overview to tell you what the differences are. Now, the main thing that I understand SMC is it's largely structure, and then the levels that they use are not right. So they use a structure for trend, that's perfectly fine, but we want to figure out more in-depth trend. We want to determine our structure based off of like a bias rather than just the trend, because there's a lot of things that can change our bias despite the trend still being in the right direction. Now, the other thing is the levels are all wrong. It pretty much just uses swing highs and swing lows, and wicks are not even what we want to be using. They're not as efficient as the candle bodies, for example. There's other things like pass-through levels, and then the left-hand side breaks when it jumps a level. These things, they might be in SMC style trading, but they're not as clear and concrete as how I'm viewing them in this new style trading. And it's something that I base off of a trader called Trader Sumo. That he taught me a couple things, just so I have to put a respect on his name. Now, in terms of sweeps, those are also all wrong. There's different sort of things, like you can regain levels, and that's a slower sweep in a sense, or you can fail to gain a level, which is a different sort of sweep. Now, sweeps are not efficient, as I said. Those are using kind of the wicks of the candles. Now, we want to use much more of the bodies. They're much more efficient and much more accurate with your prediction of the bias. Now, there's a couple more things of different ways to manage your trades that SMC style does not do, that we can actually manage our trades with much more accuracy based off of different timings and whatnot, but I just won't even talk about those in the videos in this video, because that's kind of part of my strategy that I don't want to talk too much about, that allow you to get out at like perfect exits instead of, you know, setting the target and then hoping it hits the target and then just trading based off of probability. This style of trading is much more reactionary, based off of what you're actually going to be working with. You're actually going to be seeing on the chart, and then you can react as things come, instead of just probability. Say, okay, 60% of the time this works. No, we don't want to trade like that. We want to trade based off of what we see. And then there's one more thing that I just thought of that's kind of important, is the levels are where things actually pivot are based off of higher time frame structures, and with the SMC generic style trading, the ICT generic style trading, you're not using the higher time frame trends to develop your bias. You need to kind of cascade down. The most important things are on the higher time frames. So again, guys, if what I teach you is helpful, make sure that you try to get yourself funded. You can get 200K in your account with Maven Trading here. This is a somewhat half crypto, half Forex type firm, where you're going to be getting in the future, when you pass, you're going to get like NFTs and things like this, so that you can then sell those NFTs. It'll be a certificate. So we've just gotten our first payout here. It's only $1,000, but that's on a 20K account. That's what the certificate looks like. So what we're going to be trying to do is convert these to NFTs for all of the people that actually pass, and then those NFTs will give you some sort of perk or profit, a profit split of the company, something like that, and then you can sell those as well if you want in the future to make even more profit. So we're adding a lot of different value, different things. You get large payouts. You can unlimited time. That's a huge one. There's no time limits. There's no small. There's no maximum time, there's no minimum time. Withdraw anytime you want. We're trying to play around with the idea of being able to reset your account if you do fuck up. So right now that's just a small feature, but it's going to grow. A lot of new ideas coming into this world, and we got a really growing community. So make sure you click the links in the description. So I'm just going to go over this quite briefly so that guys can get some ideas and understand what I'm talking about. Left side breaks are something that if you're breaking multiple levels, we can really skip levels. That's why you can kind of see when something's dumping like this. a lot of times the retests don't come back to those zones, and it actually just retests something on the left hand side instead of just the right hand level of interest. That's just something small that you guys can kind of pay attention to. That's makes your accuracy of where the levels are going to be a little bit stronger. See if we can find an example. As you can see, the level that was used off of this dump here, it was actually closed beyond a bunch of levels, so it actually used a far back level here that you can see on the 1 hour here, that it rejected off of that and then continued down. So we don't actually necessarily need that level. It brings me to another area here, is regains of zones. This is something that's basically like a sweep in a sense, but we've now regained, and that's going to adjust our bias detection. So we've now closed back within the zone. I'll draw the zone, right? So basically this range here, right? This range, we've closed back within it, coming back up, and that's going to adjust our bias as well. And then another really strong thing is what you guys would normally call a sweep. You guys call this a sweep, but it's actually a failure to gain. It's something different. A sweep would be suggesting that we've just swept the stops of that level, but the way that you want to be looking at it, and again, attribute all of this knowledge to Trader Sumo, really smart guy. We want to think of it as if we attempted to make a new high here and we failed, right? So we're now coming back down. So the next logical thing is, what we're going to do is we're going to come back down and we're going to test the next level of interest. Now, this brings me to something where I was saying it always goes to the higher time frame levels. So if we look at this level, so we've just failed to gain here. So the next level that we're going to come back down and test is actually that level right there, right? Because that's naturally the next untested level, right? So this is a different way to look at it. But you can see back here, a lot of SMC traders would be looking at this trade and saying, hey, this is demand. No, this isn't fucking demand. This is the level on the higher time frame, right? So you can see it perfectly kissed the higher time frame level, but we don't give a shit about this lower time frame demand shit. The only reason it's lined up there is just a coincidence. We're actually lining up for that level there. So this is what I'm talking about when I'm saying the higher time frames are what's important, and you're going to be able to balance and look at all of the different high time frames once you get really good with this, and then develop where the price is actually going to go. And you can be right technically like 95% of the time if you do this properly, right? I'm not that good, clearly, because I'm still doing shit on YouTube. Supply and demand type traders, SMC, ICT traders, they would then look at this impulse move and they'd say, hey, I want to buy in here, but they're just coincidentally being right. They're not actually understanding what's going on. What's going on is this is a failure to gain, so we have to retest the level that's most immediately to the downside. We've now retested that level, and we've then, what did we do? We failed to make a new low here. So now what do? We come back up and we retest this level, right? So that's the next level that we retest. You see it goes perfectly to there. But again, a lot of supply traders would say, hey, this is the supply zone, right? But that's wrong. That's the wrong way to look at it, okay? This is the problem that's largely with the SMC ICT style trading, is it's stupid. It's finding something that's wrong that still kind of works, right? Because they don't actually understand the way things go. So again, look at this. We've then made a failure again. So where do we go? We then draw the next line down here. You can see that. Where did it go? It tested it perfectly. Okay. Now, why? So this is a situation where, why would anybody think it would come here? This is not a supply zone. It's already been tested, right? Or a demand zone. It's already been tested. People would be drawing here and they'd be trying to buy up this area, right? If they were trying to buy demand, but that's wrong. They would then get stopped out. The right answer is right here. So that's the difference. That's where you can see that this is perfectly accurate 100% of the time versus 60% of the time. Now, the next thing that's kind of complicated is there's things that actually pass through. There's pass-through levels, right? So sometimes you'll be able to actually pass the level all the way through some data. Like if there's a large level if there's a large candle, let's look for a large candle. If there's a large candle right here, for example, and there's no levels on it, the levels can actually pass through. So this is a really simple example that you can see passes through. Sometimes it passes through multiple times. These are somewhat useful, and they're not necessarily used as much in SMC. The other thing that's missed as well is the candle bodies. These are levels, right? That's not just because it's a pivot. This is a level right here, right? Right there is a level. You can see that that's rejected off of that. And then look at this. Here's another example where we have a fail to gain off that level, right? We've then come back down. So what's naturally the level that we're going to come back down to, right? Is the next immediately level down. So there is a small level right here, right? Sorry, right here. Small level right there in that zone, but essentially it's going to be a level off of these pass-through levels here, right? That's the level that they use, pass-through levels, because this is all chop. So nobody can really pick a level there. So that passes through on the left-hand side. All right, guys, hopefully that helps explain things a little bit better so you can see that the SMC style trading, it does work. The ICT style trading, it does work, but it's not actually understanding the way that the trend works. It's not understanding the way to actually develop a bias. It's not understanding like the supply and demand is all wrong. It happens to be right most of the time, but we want to be right 100% of the time and then just have occasional mistakes. And this is what was able to bump up my trading profitability from 50-60% when I was trading the same SMC style bullshit in the past versus now I'm doing 70-80. So I've bumped up about 50% increase in my profitability just by doing this. And I imagine as I get better and better with this, I'll be able to bump it up closer to 90 pretty soon in the next year or two. It's something that you guys should check into. You guys can check out Trader Sumo. You guys can check out my stuff. You guys can check out Maven. I'll see you guys next time. Thanks for watching.